Morning, I'm Daryl Jones, Director of Research at Hedgeye. Welcome to Real-Time Alerts Live, 30 minutes, all tickers. So get your tickers into the queue. Keith will start by going through our current positions, and then we'll just run through the top tickers in the queue. Thanks.
And for those of you that are new to this, thank you for joining us. This is going to be rapid fire. Again, a little bit, quite a different format than what you're used to. Again, it rolls right out of what I was just doing in Real-Time Alerts and attempting to communicate. Don't forget that Real-Time Alerts is not a portfolio. I know that when we started this company, 14 years ago, going on 15, a lot of people wanted it to be that or whatever they think it is. It's not, okay? It's a signaling tool. It's if you're looking at Steve Cohen, instead you get to look at chubby Irish me, you're gonna see what I'm doing in real time. And most importantly, many more times, more important than the tickers themselves, it's the point I'm making from a pivot perspective or an asset allocation perspective, or how to think about the market differently than maybe you thought about before, or even have somebody on the other side of your trade so you can see, if anything, I got plenty of problems, I'll make plenty of mistakes, but I'm very consistent and disciplined executing inside of the process. We sell on green, we buy on red. We're doing things within the trade trend tail signal. Slide 9, guys. I think if you pop that up, it can give people just at least some definitionally what we're talking about. Immediate term trades are 3 weeks or less. Trends, of course, dominate my model from a backtest perspective. So if the trend is bearish, it's bearish. And that's 3 months. That's the trending. That's what we call it, the trend. And tail risk, which we've already blown through, tail risk lines on the NASDAQ and on the Russell, those are dangerous. So again, I still think that the NASDAQ will join the Russell in crashing. Again, a greater than 20% decline. Again, this show's not making big calls. If you want to read about that, read the early look. Just to jump into where the S&P 500 is, importantly, on green, and what I did in Real-Time Alerts is indicative of what you should be doing from an asset allocation perspective. Again, I sold some dollars because that was my biggest position and it's overbought. I bought some gold because it was oversold. And again, I went to the equity exposures, primarily consumer staples. I have both XLP and PBJ were my two asset allocations on the consumer staple front. That's the biggest place to be in quad 4 on the equity side. I sold that down actually to what I would call my minimum. Okay, I max out at 6% on equity asset allocations at the sector level. So I go to 6% is the max. My mid is 4%. My minimum position is 2. So I take those positions down. Why? Because if the VIX is going to go back to the top end of my range, which I have at 37 currently, shit's going to hit the fan, okay? Including your longs. And if you didn't know that, now you know. And obviously you know that if you're a power user because you saw things like XLP and XLU obviously signaling oversold while the VIX was in the high 30s. So I do think the VIX is going back there, not because God called. It's because the math says, okay? So again, I'm not Nostradamus. I'm just simply looking at a 3-factor model, which is price, volume, and volatility within the 3 durations that I'm talking about. So again, multi-factor, multi-duration. If you've never heard this before, that's cool. Think about it. Evolve. Get better. I used to be a moving monkey. I used to be Captain Stock Picker. Every name I've given you, I've been. It's all right, John?
Yeah, it's okay.
Green light. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content. All right, keep going here. Let's go. So that's what I think about that. Bond yields, interestingly, if you're long duration, which I am, I'm long both BNDD, which is Nancy Davis's deflation ETF. I'm selling some of that. I'm selling some TLT because they're up, and I buy them when they're down. I sell them when they're up. That's how you take down your exposure, raise some cash. Currently, I was just looking at it. I'm at 39% cash, which is plenty of cash. And again, if and when this market starts crashing again, I'm not going to have an issue, okay? So that's something to think about. Again, taking down some equity exposure. And just to jump right into it, what shouldn't have surprised anyone, if I'm buying gold and buying short-term notes, that means that interest rates are what? Overbought. Gold is rate sensitive. So you should have been able to proactively predict that I was going to short the financials. So short the financials. And if they go up more, short more, okay? Big lower high within a bearish trend. It's a very ugly situation for the financials. And it's kind of a gift, right? The macro tourism of it all is a wonderful thing. You want CNBC to be gainfully employed for as long as possible. You want people talking outside of this side of their ass on whatever. But when the yield curve compresses like it did overnight and people buy the financials, there aren't many gifts in macro, but buying gold today and shorting financials are certainly the ones that I'm appreciative of. So thank you to those of you that disagree with everything that I said, because there's got to be another side of the trade. Gonna be another side of the trade. All right, GLD, just to give you a risk range. Medium-term downside, by the way, let's just get into these things quickly. We'll do the positions that we still have on. Again, they're not, if it's a stock, I can't have it on because it'd be a conflict of interest. Unlike a lot of these people out there, I'm not doing that, okay? So again, I know that stocks move when we hit the button. I know that my analysts can talk about whatever. So these are the ethics, and again, the moral compass and code that I've had since starting Hedgeye. I'm like, if the analyst is talking about it, I can't execute it on the PA. In macro positions, I can't, because I don't move macro markets, okay? So again, hopefully everybody's cool with that. If you're not, I certainly am, and so is Hedgeye Nation. So just to make that point, obviously, so when I talk about my PA, they're positions that my analysts don't cover. So for example, I'm selling some ABV today, ABBV, which is one of my longs, and I was buying some more FNV, which is obviously a gold stock. So let's just get into the ones that are on your page. So I'll give you the risk range and or a trend signal if I think it's worth noting. Obviously, if it's bearish trend, the best way to keep yourself clean, and believe me, I fuck this up every way you can. Publicly, privately, I say it all the time. I'm the only person, and if you find somebody out there that has time-stamped every single thing he's done since starting this firm in 2008. You can see every win, every loss, everything, all right? So again, that's an important thing. If you, and the biggest mistake that I used to make was, try being a hero and making big market calls. When something's bearish trend, I do not buy it. That has taken me the last 7 to 10 years to figure out. Okay, I've been doing this for 22. If it is bearish trend, I shall short you when you're bouncing, and if you are bullish trend, I shall buy you. If you're not bullish trend, I'm not buying you. If you're not bearish trend, I'm not shorting you. Okay, at least not where you're going to hold me to public account. If I'm getting all wild and crazy by myself trying to prove that I can do something that I can't, maybe I'll test that again. And it definitely doesn't end well, by the way. A couple more lessons on that. Stop wearing losers. Don't hope for them to go up. If you ride a loser, you're a loser, okay? If you ride winners, you're going to win more. That took me a long time to figure out. So again, of all the mistakes and all the things I'm critical of, I'm not being a bully. I'm criticizing my former self, my bosses, etc. There's a lot of bad behavior out there. Anyway, my bosses, some of them were awesome. John Dawson in particular. Dawson Sandberg, that was. XLF, immediate term downside. So what I'm going to say is, where's the range? So it's bearish trend, immediate term downside towards 37. That's plenty of money to think about. So when you're structuring options trades, if you're buying puts, think about the risk range and using it that way. Obviously, it's nearing the top end of the range, or I wouldn't have hit the button, but it's not perfectly at the top end of the range. That's closer to 39.5. On GLD, obviously I was aggressively telling you to buy it when it was down more. That was on the macro show. Immediate-term trade oversold would be, it wasn't quite there, that's the point. In real-time alerts, which I've also noted, is that, let's say we got some guy, who's like, I don't know, does whatever he does. He's never traded a market in his life. Some of these people, they're trolls, Nick Troll, etc. They're very critical if I get anything wrong. So I do have to seek perfection, even though I won't achieve it. Right? So I won't tell you to buy gold while I'm buying gold in the middle of the range, because that's what I do, but if it's in the middle of the range, that means it can go lower, right? So today, at least gold is pretty damn close to the low end of the range. That is 167.11, okay, on GLD. Top end of the range is going higher. That's what you want to see in a bullish trend. You want to see bullish trend signals with higher highs in the range. Top end of the range just popped towards 174, which is great. That means that gold volatility is picked up a little bit, but not on a trending basis. Okay, SHY, it's like watching paint dry. So again, they're like, oh, what are you going to do with all these 0.5% moves? Like, rookies, enough. Enough. Stop it. I could run a rates desk on the old wall if I wanted to. It's really easy if you get rates right. I'm giving you SHY to help you understand how to play the game at the highest level. This isn't trying to help you pick like whatever Gerbs is pitching today. That's not what this is, okay? So again, rates, get them right. Short end of the curve, this is what this means. So SHY, the top end of the range is around 85.40, okay? So again, you buy some today to try to get that. We'll see if we get that. The low end of the range, we're right there. We're pretty damn close. So that's the way to think about it. There's not a lot of pin action in that. But it's a huge, again, if everybody's running around with their hair on fire on talking about interest rates, wouldn't it be nice to time interest rates? Okay, so that's important in terms of concept. All right, let's go to let's take the boot to one of McGough's favorite short ideas, the boot barn. This thing's going to crash if he's right on it. Fundamentally, even if he's not, Quad 4 should take it there. Low end of the range is all the way down near $89 a share. Top end of the range is Wayner Gretzky around 99er. WRBY, which is Warby Parker, pitched bullish by Barron's. Like, are you seriously still buying stocks when Barron's puts it on the cover? I mean, come on. Warby Parker, downside towards 28.5. That's a lot. That's the immediate term. Longer term, go a lot lower than that. These are the immediate term risk ranges. 3 weeks or less is where we're looking at that range as the probable outcome. Top end of the range, it actually just got very close to it, just north of 36, and it failed, as it should when something is bearish trend. SG, somebody's pinning this one up there. You know, I love it too. You know, I love you. If you hate me, I love you. I do. I used to love the guys that hated me on the ice. I blow them a kiss. Yeah, then I'd fight, you know. I think I had 100, Jones, you could look it up. I think I had 167 PIMs my last year of junior. If you hate me and I blow you a kiss, I'm willing to fight you. I may not win, but I will. I'll go for it. So again, if you're somebody who's trying to protect the house, which looks like on SG, Sweet Greens, I have 100% batting average. Howard Penny, phenomenal analyst, has been behind that. 100% from the short side, okay? You know, this is tasty. Red Robin, which we just covered some, that's 81%, so not as good. And your batting average, enough. You don't show yours. That means on Red Robin, I'm 9 for the last 11. And the two that I had wrong to be 81%, not 100, like on Sweet Green, were mistakes of less than 0.5%. So again, short selling is not easy. I've been doing it for a long time, and I've been doing it successfully. I make a lot of mistakes. But again, and again, and again, if you're taking it personally because we're going after your Sweet Greens, and you're trying to defend it in the close, which I saw somebody do the other day, you can only do that for so long. Gravity is going to get you. If the VIX goes to 38, I think Sweet Greens is going to be at 21. It's at 29. That's interesting. Now, how about some of these crap retailers in addition? So you have so we want to be short SPACs, like fake SPACs, you know, Chamath SPACs, Bill Ackman SPACs, a lot of these things, total, complete and utter bubble bullshit, right? IPO stocks that got you know, basically leg humped by CNBC, like Sweet Green, or just crap retailers now. So now you can short all the storytelling and all the crap. Isn't that awesome? Like Big Five retailers? Big Five sporting goods. Nike won't even give them their product anymore. This is Big Five. You know, this thing could go down a lot over the intermediate term. On the immediate term, low end of the range is 16.86. Top end of the risk range is 20.20 per share. Now, Playboy is, again, a great example of, I put this literally, I kept Playboy on my sheets, not to mess with you. I told you it was going to go down. I said I'm going to keep it there so that you can watch it go down as an example of what not to do. I know you do it, some of you. You ride losers like a boss, right? And that's one mother of a loser, right? And right now, it went from a big-time winner, everybody loved it in Quad 2, that's when these kind of idea stocks will work, to getting annihilated in Quad 4. And it will continue to. I said as long as it doesn't go to zero, I'll ride that sucker towards zero. Like, you shouldn't be buying that on bounces. You should be waiting for me to tell you when we're at the low end of the range. So I'll do that for you today. And again, because I knew where that was, why else would I just tell you what I just said? I mean, low end of the range for Playboy is $12.45. Okay, maybe I hit the button there for you, and then I'll wear it to zero. But again, during Quad 4 conditions, if you had, McGough said it and explained it on the call this morning. If you haven't seen it, it's free. Rewind it. He's one of the best pros you're ever going to play with. He said, look, I'm going to do a big deep dive for people that want to be longer-term investors, but in Quad 4, I realize I'm going to get body bagged. I said, indeed you are. Okay, I told him that on Restoration Hardware. We speak plainly here. There's no bullshit, right? And it's a team, right? I wouldn't be talking about this stock if it wasn't for McGough. And McGough's one of the best stock pickers I've ever worked with. But again, stock picking doesn't work in Quad 4. Portfolio management does, okay? So again, that's the low end of the range. And maybe the strategy is to buy it in the 12s. And then right before they report the quarter and shorts are going to get squeezed because the quarter is going to be good, which we do see that in certain higher short interest stocks, then it can go to 22. from 12. The hard part here is maintaining that balance, right? Why would I buy something at 14 if it's going to 12? Asking for a friend. Well, if it's going to 22 and that's my price target, why don't I buy it now? Well, you can do whatever you want. I just gave you the information you need. All right, Jonesy, now we'll take some questions. I'm sure you got a bunch of tickers in there.
Yep. We'll start from the top. Top one is actually rare earths, stock and ETF.
Oh, really?
MP and REMX.
That's the number one. I would short MP. That is immediate term. Both are bearish trade and trend. So here's a good example of two things that we got subscribers into last year because we're bullish on commodities and inflation for 18 months. Some of the best ideas we ever had, Mountain Pass was. See how that works? Now I think it's peak hawkishness, peak interest rates, peak inflation. Doesn't mean that all that has to peak tomorrow. This isn't making a call. Put me in the old wall journal. Mucker's making a call. No, it's executing on the process, right? So immediate term downside on REMX. Again, it's bearish trade and trend. The thing looks terrible, actually. Uranium does too. Remember how we got you out of that? 95.31 is low end of the range. Top end of the range for REMX is around 105. And then Mountain Pass, which is, I'd actually short it right here. I'd press it if I was short it, which I can't. I can't do that because Jay Van Sciver covers the stock fundamentally for us. Medium term downside on MP to 35.01, top end of the risk range. It just pretty much failed there. Actually, it broke trend recently. Trend for this is around 42. When something goes from bullish to bearish trend, that's called a phase transition. If the pending quad is disinflation, in this case, you don't buy these kinds of stocks. You short them.
Okay. GDX and GDXJ.
I was looking at GDX. Again, gold and gold miners are not the same thing. One is an equity, one's a currency, gold, according to me. And one of those two things is not debatable. Gold. So maybe we buy gold miners when they're oversold when the VIX is in the mid to high 30s again. The problem with GDX is that, like a lot of equities and ETFs right now, it doesn't look as bad as GERBS, the GK thing, or whatever the hell that is. But it's bearish trade, bearish trend, so I'm not buying it until I get the low end of the range. So GDX, and again, there I did it again. I said at the beginning of the show that when I buy bearish trends, I make mistakes. So don't do that. Don't even say that. I say it to myself. See how I will make the because I'm like, okay, I'm so bullish on gold, then eventually gold miners from the low end of the range. Well, why would I do that? Why don't I wait for it to go bullish trend? Okay, I just fixed my own problems. 29.07 is low end of the range, which again, that's a lower low, so that's not good. Top end of the range for GDX is, it's all the way back up at 32.5. So that's, it could bounce there. It could irritate people. Again, I think it's going to trade with equity volatility.
Okay, Dollar Tree, DLTR.
And when I say I think, that means the machine just said that. That doesn't mean that like these people on TV. Well, if you look at the PE, which that worked like when the internet came to be, where that was actually useful information, but it's really not. It doesn't give you anything in terms of actual signal. Telling me what the trailing or valuation of a thing is, especially for these CNBC fast monkey types, they don't even have a model like for the company. So what are you talking about? You're just talking, right? DLTR, that is actually one of the few stocks that has held on to its trend. Now, trend for that stock is 125. The risk range is pretty much at trend, which is going to irritate you. When you go to the trend, it starts to really feel bad because it acts bad. 125 to 135 is the risk range on that. If you're trying to put a portfolio together, I do think DLTR has a place in it. If I look at it, Jonesy, which I only have 6 stocks that I'd stay long today of the whole Hedgeye universe, and I do on the names that I'm waiting to buy the damn dips on, DLTR's on that list.
Okay.
If it breaks 125, it's stopped out, so that's the rule, right? So again, stay with your rules, don't stay with your research.
AZO, or AZO.
McGough, by the way, likes DLTR. AZO is AutoZone. Media term upside in the range towards $1,978. Low end of the range is $1,860. That's a stock that broke trend yesterday, and it's trying to recover the trend line. I wouldn't believe that. If you believe the quad, you would be a seller on green of the AutoZone.
All right. BCO, Brinks.
I like that one. Are you looking at my notes?
No, I actually have it on in the, the Marshall Wace.
You dirty dog.
I've been meaning to ask you about it because it's performed so well.
BCO, Brinks. Yeah. Now, that's a way to play cash.
Well, cash, right style factors, and then, this is my fundamental view, but Omicron declining because
Yep.
you get more, more movement and people
Mobility.
mobility. So
if Hedgeye Nation keeps blowing up CNBC, I might need an armored car too.
yeah. BCO, it's acted really that's a qualitative statement. It's acted really well in this sort of drawdown.
Well, it sounds qualitative, but you're
what I'm
acting off
saying.
what I told you, right?
Yeah,
Which is it's like bullish trade and trend.
Yeah.
And unlike what I said on other things, when you go from bearish, in this case, you're going from bearish to bullish trend. That's called a bullish trend reversal or a phase transition. Okay, that is a damn good looking stock. I mean, I should have hit the button on that before I came in here, but I was a little busy with other things because it got pretty close to the low end of the range. Low end of the range on that is 68.06. Top end of the risk range is all the way up at almost 74, Jonesy. Okay. There are very few stocks, and that is now number 7 on my list. BCO is. That's that's the 7th stock that I could tell you in the entire Hedgeye universe. It's bullish trade and trend.
Okay,
that's it. 7. Another name, just so that I'll give you a name, just so that you know. General Mills acting excellent today off the low end of the risk range. That's on that list. Constellation Brands is on that list. STZ also held the low end. Bullish trend, not bullish trade. GIS is bullish trade and trend. STZ is bearish trade, bullish trend. Can you maintain opposing thoughts in your head and execute? I seriously think, actually I know, this is like a big competitive advantage. I'm not as smart as most people that on Wall Street. Like there are some really smart people. Like I had the lowest SAT score at Yale. My English lit paper, as you read about in the early look note this morning, literally Canadian junior hockey player rolls in, gets an ungradable. Like it helps me to not be smart. So many people fuck this up because they're so smart. They need to be right in their head. Stop it. Maintain opposing thoughts. Execute on the signal. Know that you're really not that smart, right? These are good things.
Okay, PRAA.
Oh, guys are getting into that, huh? PRA, low end of the range is 44.03. Top end of the range is 47.90. So what is it? Yeah, 47.97.
Okay, I got a couple Mike Taylor related names.
My eyes are going here. Oh, here we go again. So now we got Hedgeye Nation. They're going to go drag Mike through the. You gave me a ticker. It's still in my book. It doesn't work. When something breaks, if it's in the wrong factor exposure, you got to stop it. You got to stop it. When we told you that we're coming out of quad 2, you should have cleared the decks on every small cap crap loser and or winner you thought it could be. That's what you should have done. Go back. If you want to wear the baggage, and I see it on Twitter, it's like, Mike, you told me. It's like, grow up and man up. It's mostly men that acts this way. Women are much more balanced.
Okay.
Like it's just like, what are the tickers?
Pink.
Apologies. That one is like kind of bothering. But
pink and then HZNP.
HZNP. What the? Actually, that's not even one. You're using Canadian language. HZNP. Oh yeah, Horizon Therapeutics. I see there it is, the pick. I don't know if Mike likes it, but I'd be short that stock. I mean, at 84, maybe he is short that stock. 84.02, low end of the range, which would be a lower low. Bearish trend, top end of the range is 90.50. And then on, what was the other one?
Pink.
Pink.
Pink,
that broke trade and trend, that's why I sold it. It's no offense to Mike, it's what it is. Immediate term downside to 23.67. Top end of the range is at 26.12.
Okay, utilities, XLU.
Yeah, XLU, good question. I just sold some here, I should say. So again, I went, I trade for myself first. In my PA, I have macro positions. I'm long utilities and staples. Staples is much better in terms of signal strength. So signal strength is defined within the, you'll note the deeper you dig, the less I'll be that guy you needed me to be. Even Doug Cass said today he's impressed.
Doug Cass said that?
Yeah, I appreciate that.
Where?
On Twitter.
Oh, wow.
Well, for a long time they wanted me to be that guy, like, if only like them or whatever. But I'm not. The deeper you dig into the quantified process here, the mathematically rules-based process, I think you're gonna like it. I think you're gonna like it more. So again, when you look at something when I say signal strength, what defines the best signal strength stocks like General Mills or BCO brings? or XLP or gold is that they're signaling higher highs in the risk range. I should say, actually, XLP is signaling a lower high right now. But they're bullish trade and trend higher highs. So the things you'll be number one on signal strength. If you're on my hockey team, I'm going to play the crap out of you if that's who you are. You know how Diego taught you you like the idea of people on the field, but you think you should always have perma bears out there? Nope. You got to put your scorers out there when it's time to score goals. So, and weakening signal strength is something that goes from bullish trade and trend to bearish trade, but still stays bullish trend, so et cetera. And utilities did that. So I took it to my minimum today, which is a 2% position on the bounce. The risk range on utilities, by the way, geez. See, when I start talking, and sometimes my model can refresh. That's a beauty too of like when I first got in this business, like we barely really use computers. Like, I mean, I can get a refresh on a global GDP nowcast. By the way, we frickin' nailed that number. Like our Drago, Steiner, our team, we got our models back. Somebody stole them, and what we found is when we rebuilt them, we did them a lot better. And so our GDP number today, like on September 23rd, we said, wow, we're looking for like a 6 to 7% GDP number, and the Atlanta Fed's at 0. 0, I said. We should really get long for a quad 2 acceleration, and we did, and that made subscribers happy. So today's number comes in at 6.9. We were at 6.6. The Atlanta Fed yesterday, before they took the number up after it was reported, they're at like 5. Thanks for coming up. But nowcasting, like I can hit a button in 30 seconds, get a nowcast for 50 different countries in the world on growth and inflation using our proprietary models. That's awesome. Risk ranges on everything. Love it. Did I actually give the risk range on utilities?
No.
Oh, 66 to 70.
Okay, we're going to a couple pennies names.
So you'll note that it could go to 70, but on a bounce, the player's card says, doesn't mean it has to go to 70. It means that, when I went bigger in it, I just sell some of what I bought on the down move. So that's how I think about that.
Couple penny names: Starbucks and McDonald's, SBUX and MCD.
Ooh, Starbucks looks like 10 pounds of shit in a 1 pound bag. That thing is awful. Consumer discretionary is not where you want to be in quad 4 unless you're short. Low end of the range is towards 94. Top end of the range, big lower high for Starbucks, right around 99. Now, McDonald's is an interesting one. I was curious. I hadn't looked at it, but I said, okay, Penny gets on the call. He's like, McDonald's puts up like a 12% or something comp. I'm not like Kramer. I can't remember like every single thing.
I think it was 7. But a very high comp for McDonald's.
Whatever it was, it was good.
Yeah.
And I was like, if the stock's down on this, like that's a very bearish thing, right? The shit that's bouncing today is the shit. Like the stuff that people are short, they're covering. Lots of hedge funds are really getting long again, net. And I think that's a big part of the catalyst that I'm looking towards to the downside. Is the only thing that gets a market to crash is more people think it's done going down. Right? Yeah. So when you get good news and the stock goes down, McDonald's, low end of the range, it's bearish trade, bearish trend, and it's in the right sector bucket, like for quad 4, which is it's consumer staple. When the things that should look good look bad, and the things that look bad look really, really bad, that's why I'm saying what I'm saying. Top end of the risk range on McDonald's is 258.
Okay. Semiconductors, SMH.
Oh my God, those look terrible. I mean, imagine you're the YOLO or whoever, the person that's just like, TSMC had a big number and it ripped. But that day, semis were making lower highs within a developing bearish trend, then boom, right through trend. Trend broke like a hot knife through butter. And that thing is ugly. I mean, if there's one chart to sell the shit out of this market on the tech side, it's semis. Because semis were the only thing that was left in tech that you could own. Low end of the range, 250. I mean, it's a 263 and making lower lows. That is just bad, okay? Top end of the range is 277.
Okay. S-Fix, Stitch Fix.
That is a pig. We hate that stock. McGough hates it, is what I mean. Like, there's a good example. Like bears are like, oh, I should cover some. Maybe the market's going to rally. And then it'll go down again, new lows. That's been a great short call, by the way. 1341 low end of the range. Top end of the range is 16.80. lower highs, lower lows within bearish trends, and Brian McGough's bearish. That's nice.
Sleep Number, SNBR, also a McGough name. Probably looks pretty similar.
I shorted it the other day. You all made money on that. Well done. In real-time alerts, I couldn't. And low end of the range is around 66. It's at 70. Top end of the range is literally where I sent you the sell signal, right around 77 and change. Today it's at 77. Don't freak out if that's not exactly what it was on that day. It's more like, it's what it is, right? I mean, this was a professional sell signal from a professional short seller in Brian McGough in retail stocks that are going to make lower lows. I mean, these things have exceptionally difficult, what we call comparisons. The only thing that's going to happen with these things are that they're going to slow and slow and slow. Once we get to the deepest part of quad 4 and Q2, and the Fed's like trying to raise for the second time, I mean, this is going to be ugly. It's already getting ugly. It's ugly.
Okay, Dufry, Dufry.
Yeah, somebody's still long that probably. What's do?
It's from Dick in Lake Louise.
This is how long ago I was interested in buying this stock. I mean, I forgot the ticker. But again, who gets you out? I mean, even if my analyst likes it, I'll get you out. I mean, it's not an offensive thing. I'm just trying to tell you how it really works. Like, this isn't like watching Billions, where you got some clever dude and some guy with inside information and and it's like, the signal doesn't like it, I don't like it. If the analyst likes it and the signal doesn't like it, I don't like it. If both the signal and the analyst agree, I like it. Dufry is having a little debate. Can I get back to bullish trend? It looks like a lot of these travel and leisure stocks, it's got literally the same fractal pattern as Expedia and Royal Caribbean. So if you take all those, so when I look at something, again, I think that my competitive advantage is I'm not that smart, right? So I don't have I'm not preconditioned to believe in some dogma or some permabull thing or hodling. So when I look at things, I see a fractal pattern. They're similar sets. It's like looking at the contours of an ocean line, or from up above, or the contours of a leaf. Could you really tell what the difference is between those if you're standing far enough away? Absolutely not. So why do you look at stocks differently? Because they're good picks? No. It's all the same thing. They're all the same fractal pattern. What the market's saying on travel stocks, methinks, after I looked at the pattern, not before. Right? I don't tell the thing what to look like. I don't tell the market what to do. What I do is I say, okay, these are similar sets. They're growing. That's the whole point about fractal math. If you do the same thing over and over again, the edges of the contour of an ocean line or the edges of a leaf appear. Right? So you hit it with a lot of stuff, a lot of weather, a lot of factors, lightning, shit happening, right? And that's what it looks like. Like Dufry, did I actually give the risk range yet?
Nope.
No, I didn't. Damn it. See, this is why these real-time alerts sessions I can really get away from what people really want. Low end of the range is 489. Top end of the risk range is 5.43. Just because I mentioned Expedia and those are names that are actually. I will put Dufry back on the potential buy. Thank you. I appreciate it. I appreciate you showing me what I should be looking at. RCL risk range is called 77 by 86. That's on my could buy it. But again, I'm not going to buy anything when I think the market's going to collapse again. Why would I do that? Expedia, again, I think you can get it at like 168 low end of the range. Top end of the range is 185.
Okay, we're going to go to Mike from Gales Ferry, Connecticut, UNG, home of Yale Crew. UNG, Natty.
Natty.
We talked about it on the macro show today a bit.
Does he want UNG or does he want Natty Bow?
UNG.
Natty Bow. We drank a pile of those in college. That's why Jonesy and Buds and I are just going to be here forever together. Natty Bow. Remember the time what did I do when we ran out of money that one time?
You sold your watch for the last beers we could buy one night, man.
Maybe we should have a beer after this one. It's been fun though. Thank you for joining us. I think we're at the time. Plus, there's too many things that I've already looked at here that I want to go execute on. UNG, low end of the risk. That looks. I buy some puts at least, or I will. Looking at the 1450s. Top end of the range is like 1475, so that's why I'd look at something like that. Low end of the range, can get you to 12.5 in a New York minute. People are buying natural gas. Don't tell anyone.
It's cold out.
It's going to snow in New York. I mean, there's some things in life that are just made for Wall Street, right? And it doesn't have to be that sophisticated, right? You don't have to be like George Jetson and fly something to the moon and buy the stock. You just know that they're buying it because the weather is going to happen. And then when the weather stops happening and it stops at the top end of the range, the high probability bet, we went through that on the macro show because there's also a big implied vol discount currently in UNG. So guys, pop that up on the board. I'm not going to review the same exact point, but you can see where the data is. Again, every decision I make is based on numbers, not narratives. Okay? So the narrative is buy it because it's going to snow. The execution point is sell it or buy puts because it's going to go down. Okay? I think that's it.
Yep, we're going to wrap it up there. Thanks, everybody, for tuning in. Back in the morning macro show tomorrow at 9 a.m. Take care.